Hey everybody, what's up? It is Thursday, October 3rd, right? So we had a little rebound off the lows in the stock market today. Actually, I sent out an email to my MMT Trader subscribers early today when the market was down around 200. I said we would see a bounce. And the reason behind that was quite simple. The Fed did another round of repos this morning. I believe it was like 33 billion or so. And we also had a Social Security payment that hit today. So the combination of those two things, you had the repo activity, which pushed in reserves into the system, and that Social Security payment, that's another big injection of reserves. Remember, when the government spends, it credits bank accounts, and that is an increase in reserves in the system. Not surprisingly, we saw that market sell-off. Now, you should be seeing the correlation now. All right, anyone who's been following along with what I've been saying here should start to see the connection between these reserve additions and the market selling off, and then periods when reserves peak and they start to come down and the market rallies. And I have worked up a number of charts. I've sent it out to my subscribers that show a very strong correlation between those two things. It's actually an inverse correlation. In other words, increasing reserves, market goes down. Decreasing reserves, market goes up. So what happened was we were down 200. I sent out an email and I said it's time to buy. We're looking for a short-term bounce, because the Fed is done for the week. It's doing these repos from Monday through Thursday, so there won't be any of these repos tomorrow. And there won't be another Social Security payment until October 9th next week. Okay, so what's that, Wednesday? So we're in the clear. We're in the clear for now. At least until Monday, I would say, because that's when the Fed is going to start again with these repos. Now, tonight, every Thursday, the Fed comes out with its weekly report. Basically, its entire balance sheet. You could see, where the levels are. And reserves are now up to 1.485 trillion. Now, remember, they got down as low as, I think it was 1.35 trillion. It would have been lower than that, but they had begun already with the repos. Now, folks, there's 13 trillion of deposits in the banking system. Banks have to hold 10% against those deposits. That is the deposit rate, reserve ratio. Okay, so 13 trillion in deposits requires 1.3 trillion in reserves, and we got down like right at that level. There were no excess reserves. Now we're up to almost 1.5 trillion, 1.485 trillion. And as you can see, the overnight repo rate is going out every day at around 1.8%. That is basically where the Fed's target is. So the situation has been, the fires have been put out, but you have to also understand that just normal loan growth, right? Because loans create reserves. It's not the other way around. They don't lend out the reserves. Loans create reserves. So normal loan growth will require a certain amount of reserve growth going forward. The Fed will have to accommodate that, in other words. Getting very technical here, but let me just say that looking for a bounce today. We got the bounce. I think the bounce is good until Monday. In other words, tomorrow we get the jobs report. I don't think that is going to be a factor. Now, it will be a very short-term factor. In other words, as soon as that number comes out, the zombies are going to react. You know that, because that's what they do. And I came out with my forecast of the payroll number. I sent that out. If you want a copy of that, I mean, you still have time. Email me. Sign up for a 30-day free trial of MMT Trader. I'll send you out my forecast. But I think that the main thing tomorrow is we will have an up day because these negative monetary factors are off the table, at least until Monday when they start again with these repos. And next week's going to be very interesting, folks, because October 10th, those term repos unwind, they settle. So that's off the table. We're going to see what the Fed has in store after that, if anything at all. I don't know. There's talk that they might do permanent, raise the whole thing up by 500 billion. I don't know what they're going to do. I do not know what they're going to do. Today we had a big jump in the probabilities for a rate cut in October. I do not think there's going to be a rate cut. I do not think there's going to be a rate cut. There was too much dissent at the last meeting, and I think they're going to wait. I think they will wait. There is no Fed meeting in November, so if they don't do anything now, nothing's going to happen until December. I don't think really there's any chance of an inter-meeting rate cut. So I think the bond market got a little bit ahead of itself. But we'll see what happens. In any case, got to sign up, folks. What are you waiting for? Guys, you got to sign up. MMT Trader. The only applied, I've been telling you a lot of stuff here on these videos. I've been educating you on these videos, but there's so much more in there. We were short going into this whole sell-off. We were short going into this whole sell-off based on the understanding of these flows. These are tradable phenomena. If you understand the impact of these things very clearly, like I said in my last video, this is like having inside information, only it's legal. And of course, the main thing that I help people with is the mental game. Because like I've said so many times in the past, without the mental game, you could have that inside information. Somebody could tell you what is going to happen. You're still not going to make any money. And on the flip side of that, if you have the mental game, you could throw darts at a dartboard and make money. So go to my website right now, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. See everybody tomorrow. Bye-bye.